Today, you really made some money. Today was a good day for you if you are a stock market investor. And I want to say congratulations because I'm probably talking to some black people who are feeling awfully rich right now. And so, what I want to do is I want to break down for you why your stocks are doing so well, why you made so much money, why the equity markets took off. And we're going to talk about all this right now. So, get comfortable, buckle up your seatbelt. We're going to get started on the Black Financial Channel right this second. Hey, what's going on, guys? Welcome to the Black Financial Channel. This is theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I am your friendly neighborhood finance professor. On the Black Financial Channel, we talk about black wealth and black economics every day, sometimes as much as 10 times a day, under one condition. The condition is that the people I talk to, my people, are black first. Black first means that we put our community at the top of our priority list. Black first means we solve our problems. Black first means we educate our own children, create our own jobs, support black businesses. If you are B1 Black First, put your hashtag B and the number one in the chat. Let me know where you stand. Let me know where you are. Also, feel free to shout out your city too, or shout out the name of your business. Anything that you want to do on this platform is certainly welcome. So I'm going to say hello to the Black Bezos. That's a great name. I like the ambition. Polluted, El Haj, Courtney Tarver, Walner Ferrier, is it Ferrier, like French, 86, and Ben Israel. I'm not going to try to say the first word because I'm going to mess it up, man. I don't want to disrespect your name, brother. So anyway, let me ask you guys this. How many of you made money today? Give me a yes. Everybody, all the money makers, say yes in the chat if you made money and if today was a good day for you. Like the homie Ice Cube used to say, remember, today was a good day. And it's so funny. Since I became friends with Ice Cube, I really had the heart to tell him that even though that was people's most favorite song of all time, the most popular song he ever made, or one of the most popular, it was the song I hated the most. It was literally the song I hated the most. Ice Cube was one of my favorite rappers back in the day, and Today Was a Good Day was completely not my favorite song because it was definitely like too positive. Well, it's not that it was too positive; it was too happy and cheerful. I just felt like, okay, this is the one you're gonna make for the radio, but I like when Ice Cube was hardcore. That was more interesting to me. But anyway, let's talk about the stock market today. So today the Dow jumped 380 points. The Nasdaq went up 2%. That's a big deal. 2% is a big number. Why did it do this? What happened today to cause the market to move the way that it did? Well, let me just give you the Dr. Boyce breakdown in terms of what's going on with the markets. I'm going to read some of this from MSNBC, and of course, give you the interpretation that I see, through my eyes, kind of as a financial guy. So they said U.S. stocks cut their losses and moved higher on Wednesday as the market got past one of the biggest uncertainties heading into year end. The Federal Reserve signaled a more aggressive unwinding of its monthly bond buying as expected by the market and forecast multiple rate hikes on the way next year. So let me ask y'all a little question. Let's do a quick little quiz. If the Fed slows down bond buying, is that going to have an increase? Should that cause an increase in stock prices or a decrease? If the Fed stops buying bonds and slows that down, they call it tapering. Is that supposed to increase stock prices or decrease stock prices? Can give me an answer in the chat. Let me know what the answer is. Exactly. It decreases stock prices, right? So I'm making my point here, right? So this information is not good information for stocks. It's supposed to cause it to decrease, right? Okay, let me ask y'all another question. I'll give you another little quiz. If the Federal Reserve increases interest rates, if they increase interest rates, does that cause stock prices to go up, or does it typically cause them to go down? Increase or decrease? Will an increase in interest rates cause prices to go up, stock prices to go up, or stock prices to go down? The answer is down, baby, down by the roller coaster, right? So think about this, process this for a minute. I need y'all to kind of understand this because I'm making my point. So the two pieces of information I just gave you are both Debbie Downers. Like, both of those pieces of information are not things that should cause the market to go up. They actually should cause the market to go down. Well, if that's the case, if the Fed chairman is dropping all this bad news on you, why in the holy shish kebab? I'm trying to stop cussing because I've been cussing for so many years on this platform, and I'm trying not to do that so much. How in the holy, is the market going up? Well, let me explain something about expectations and let me tell you something about risk. The reason that stock prices went up, this is the Dr. Boyce speculation at this point based on the information I have, is because one, Black Bezos, you have it right. The price was already, this information was already factored in. People already knew that the Fed was going, the chairman was going to probably bring some bad news. They knew they were going to taper. They knew they were going to probably raise interest rates. The problem was they didn't know what it was going to look like. They didn't know how much he was going to, how fast he was going to taper, but the precise amounts. They didn't know how many rate hikes there would be. They didn't know exactly how he would respond. There was some probability that he might sit back there and continue to live in la la land and believe that this inflation is transitory, which he doesn't use the word transitory anymore. Transitory as in temporary. He does not use that term anymore. He said, I'm going to retire the word transitory, which has a lot of people saying, ha ha, I told you so. When inflation started up, there were the big debate, as I mentioned to you guys months ago several times, is that was whether or not this inflation was transitory or permanent. Well, he's kind of making the argument that it could become permanent and that we got to pull out some big guns to kind of deal with inflation. Before, the enemy was a lack of economic growth. Before, that was the war you were fighting, the war against the next Great Depression. Now that they've won that war, now they're fighting a different war. They're going beyond the war of the Great Depression. Now the different war is the war against inflation. So effectively, the reason that prices went up, in my view, is because once he lays down the pencil and actually says exactly what he's going to do, that allows everybody to kind of breathe a collective sigh of relief to let them know that, hey, this is something that is not, that it's not going to be something where we're going to ignore this. We see it, we're going to react to it. You don't have to wonder what we're going to do. Now we're telling you what we're going to do. So that simple reduction in uncertainty, that reduction in what they refer to as information dispersion, is what caused your prices to go up. The market does not like uncertainty. And so in a way, it's kind of like, imagine if somebody somebody goes on trial and then they get found guilty. And then you're like, oh my God, they're guilty, right? So you're already sad. You kind of factor that in. You kind of know they're probably going to get locked up, right? Now, the only question at that point is, what kind of sentence is the judge going to give? Is the judge going to give them 2 years, 30 years, or anything in between, right? So what happens is you have a lot of information dispersion. Even though you know they're guilty, you know they're going to jail. You don't know how the judge is going to react. For all you know, the judge could give them life without parole, or the judge might give them probation. It's very wide dispersion. That's going to create uneasiness. That makes you nervous. When the market gets nervous, prices go down. So once the judge lays down the sentence and the judge comes out and says, you're going to get 8 years in prison, even though you're sad about going to jail, ain't nobody ever been happy about going to jail. They send too many black people to jail. That's why I think that's one of the reasons why we deserve reparations from among many. But at least you know how long you're going. At least you can now make a plan. Do you follow what I'm saying? Do you get what I'm saying? Give me a yes in the chat if you follow what I'm saying. So effectively, what's going to happen is that the Fed is going to stop pumping up the economy. You're going to have a very different stock market next year. All the fly-by-night investors who started investing 6 months ago, 8 months ago, a year ago, who are now calling themselves stock market experts, that the market's really going to test their gangster next year. The market's going to test to see, okay, are you really as good as you said you are? Because now this is not a market like you had before. Before you had a market where almost all the stocks went up, and you think it's because you got the magic formula, when really it wasn't that they had a magic formula. It was that the market itself, all of the entire freaking economy was going insane. So that's why everybody and their mother was making money, and that's why everybody got excited about stock market investing. And as I just told a sister from the final call who just interviewed me about what to expect in 2022, I said that this year in 2021 is that in the stock market, you had a lot of gamblers who were disguised as investors. You had a lot of people that were gambling who thought they were investing. Now the real investing begins. Now the fast money is going to get replaced by the slow money. If you try to go after the fast money, you might get burned and body slammed. You might end up losing all your family wealth, everything you got, all the money you invested, because somebody told you to go put all your money in the latest crypto. And that's not the way to build long-term family wealth. Okay. So effectively, there are companies like Apple that went up 3%. I think that's great. If you bought Apple yesterday, congratulations. I mentioned Apple is one of the stocks that I like for 2022 and beyond. And so let's see, some of the bank stocks got hit a little bit. And so, if you want to know kind of what's going on and what's happening in your portfolio, you feel free to go read some of this information from the chairman Fed. His name is Jerome Powell. One of the things that's interesting, though, is that now they're behaving as if the economy is going to do great. They're kind of reacting now as if our biggest problem is not an economic downturn. Our biggest problem is inflation that comes from an extraordinary upturn. Well, that can all change very quickly if one of these variants of the virus comes out and it's extremely severe enough to cause a shutdown. I would argue that another Omicron isn't going to do it. Omicron don't scare nobody. I'm sorry, it just doesn't. I'm just going to keep it honest with you. I don't know. Let me ask y'all. I'm trying to be fair here. How many of y'all got like scared in your boots when you heard about the Omicron variant? How many of y'all heard about it and said, "Oh my God, we're going to shut down. You know, life might end as we know it. I might die today." How many of y'all knew? How many of y'all felt that way? I bet the answer is no. Most of you probably didn't care much about the Omicron variant. I'm not saying you shouldn't care. I'm just saying that a lot of people don't care. Well, what if another variant comes out that has a mortality rate of, say, 10%? Right? Or that's much more lethal and spreads quickly and also kills a lot of people. Well, that could cause another shutdown, which at that point you're back at square one, which therefore puts your economy in dire trouble because I believe the Fed has run out of tools. They have continuously worked to inflate the dollar so much that they're devalued. They're really causing significant long-term problems in the American economic system because I personally believe that they overreacted a little bit. I like the fast action. I like the fact that they were so diligent in the beginning, but they were very sloppy when it came to the distribution of things like PPP loans. They were very sloppy in taking too long to do the tapering. They were very sloppy in making sure that everyone in the economy was protected. They did a couple things right, but they did a lot of things wrong. But then again, since when did politicians in America ever do anything right? So it's up to you to do right by you and do right by your family. And that's what I want to help you do. All right. So I'm going to get out of here, guys. Please hit the thumbs up button. Thumbs up, thumbs up, thumbs up. Share, subscribe. Also, if you want to join our stock market investing class and you want to get better at this stuff, I have a PhD. I've been teaching college students for 30 years. Feel free to go to boycewatkins.com. You get a free month in my class. And in fact, it doesn't cost you anything. And you can send me questions. You can email me your questions. I will answer them. I will research them. I will give you personalized reactions to all your questions in the class. So feel free to go sign up at boycewatkins.com. I'm out, guys. Have a good day. Love you. Stay black. Stay cool. Stay sexy. Talk to you later. Peace.